Hello everyone, and thanks very much for tuning in. My name is Peter Murphy. I'm a partner at HFW in Hong Kong, where I've been working for the past 23 years. I'm a disputes lawyer, and a key focus area for me is commodities. Now, I'm going to talk to you about trading in Asia Pacific, current trends and future forecasts. I'm going to be looking back over the past 12 months and forward to the next 12. But before that, a general comment. I want to acknowledge that 2020 was a year unlike any other. I do hope that you and your families have coped as best as you can in the circumstances. We've been fortunate here in Hong Kong. Our COVID numbers have been relatively low, and our office has been able to stay open throughout. However, as a jurisdiction, we are not out of the woods yet, although the rolling out of vaccines here will hopefully help. So moving on to looking back over the last 12 months. I'm going to give you a snapshot of about 7 key trends we've been seeing in Asia Pacific. Now, number 1 is, of course, COVID. In the second and third quarters of 2020, we were busy finding solutions to the unique problems caused by the global COVID lockdowns. Examples involve clients trading from India when, for a period, the complete lockdown there meant that on loading, none of the cargo documents, including the bills of lading, could be issued. The risk of discharge port delays was a real issue, but with all parties in the sale and purchase and charter chains pulling in the same direction, it was all about LOIs, and not just delivery LOIs for discharge, but also payment LOIs to facilitate payment flow under letters of credit. Second, and more generally, the risk of delays was prevalent for much of 2020 and into 2021. Whether force majeure or, for example, simply demurrage or detention, we were also busy helping clients to mitigate the risk of labour and other restrictions brought about by the pandemic. Third, one of the more immediate and direct consequences of COVID were issues arising from the manufacture, trade and supply of PPE, or personal protective equipment. This was a particular bandwagon that many businesses jumped on, without any experience or knowledge, but keen to cash in on the substantial markup between the manufacturer and the end user. We helped a number of trading clients caught up in the fallout from unscrupulous manufacturers in this part of the world who were merrily churning out PPE for sale into the EU, but without the necessary credentials. Fourth, 2020 was a year that saw some high-profile commodity trading collapses. For example, Zenrock Commodities, Hin Leong Trading, Agritrade Resources, and Phoenix Commodities. Singapore in particular was hit by billions of dollars in commodity defaults. Now, one consequence of this has been the working group set up in Singapore to create a digital trade finance registry to boost transparency going forward. Watch this space on that. Fifth, missed delivery claims. 2020 saw more than its fair share of high-profile missed delivery claims, many of which have been playing out before the High Court in London, which is the standard jurisdiction under delivery LOIs. In many cases, the claimant banks were able to transfer their own risk to their customer, even though under their own financing arrangements, the banks themselves may not have acted as diligently as they should have done. With only very limited exceptions, the thrust of the judgments coming out of the High Court in London is very much that LOIs were to be honoured, whatever the underlying financing arrangements, but I am not the only lawyer to question for how long. Why should a third-party charterer or trader be left to pick up the bill when the bank itself has been happy to extend credit lines to its customer in the knowledge that it can defray its exposure elsewhere? Sixth, trade wars. These have never been far from headlines and news feeds, and the past 12 months have been no exception. Now, for traders and charterers caught up in the China-Australia trade war, this has been particularly challenging. China has targeted a number of Australian exports, including barley, beef, wine, lobster, and of course coal. For coal in particular, there were hundreds of ships waiting to discharge coal off the coast of China, and we've been helping clients to mitigate the risks arising from these delays. Finally, number 7, cyber fraud. Cyber fraud is something else that continues to rear its ugly head, especially it seems by fraudsters with onshore bank accounts in Hong Kong. Phishing and other email fraud continues to catch traders unawares. And while the financial consequences are obvious, quick and decisive action is paramount. Thankfully, we have had a number of successes across the past 12 months, freezing fraudsters' accounts, tracing the proceeds of the fraud, and ultimately returning millions of dollars to the victims. In wrapping up this look back, there are, of course, several things that I might have included in my list, but in the interest of time have not. These include the supply chain fallout from the recent blockage in the Suez Canal, the fact that ESG is a firm agenda item at Davos, in boardrooms, at the United Nations, and in stock exchanges around the world. And finally, I should mention that digital innovation is shaking up business practices. With that in mind, I wonder whether electronic bills of lading will now get traction in the bulk commodities market, something which has been threatening to happen for, well, the last 20 years. That was the look back. So how about the forecast for the next 12 months? Well, I've got three broad comments. First, COVID is still with us, regrettably, and it will continue to impact all walks of life, including the commodities markets, for months, if not years to come. Second, market volatility. Some markets have been quite volatile, and I expect that to continue. And where there is volatility, in addition to opportunities, there are inevitably market stresses, delays, default, and risks of non-performance. And third, unpredictability. As I see it, the only real certainty is the unpredictability across markets and businesses, and commodities is no exception. For producers, traders, and end users everywhere, my only advice would be to have your in-house lawyers or preferred counsel stress test your contracts on a regular basis. In my book, contracting against default, delay, or other unforeseen circumstances is well worth the time and effort. That's all from me today. Thank you very much for your time.